Hello and welcome to Brownfield's weekly commodity market update. I'm Brownfield's Will Robinson, joined as always by the University of Missouri's Ben Brown. Ben, how's it going?
I'm good. How are you today, Will?
I'm doing all right. It's been kind of wet and a lot of rainfall in the eastern corn belt out here in Ohio for the last couple weeks. So it's been a little slow planting, but I think out west you might start to see a little bit more rainfall, hopefully.
Yeah, hopefully we're supposed to get some rain today. This will be our first kind of major system coming through central Missouri in several weeks, but I'm looking at the radar right now and it might be going north of us. So fingers crossed we get something.
Well, hopefully it does, lower a little bit of drought pressure over there in the Western Corn Belt up into Iowa. But looking at some price changes on the week, a lot of upticks on the week. Looking first at that May corn contract up 8 cents at 4.39. December corn up 3 cents at 4.72. May soybeans up 3 cents at 11.61. November soybeans up 4 cents at 11.71. Soybean oil on a cents per pound basis was up 0.19 cents at 45.66 cents. That soybean meal by the short ton for May was up $5.80 at 344.30. The May wheat contract was up 19 cents at 5.70. July wheat up 20 cents at 5.87. And then that West Texas Intermediate crude oil contract for June down $2.87 at 82.01. So been a lot of gains on the week, but really some stronger gains on the wheat front.
Sure, that was definitely the highlight, I think, of the week in terms of price changes. Corn and soybeans really probably wouldn't have had a positive week had it not been for the strong gains we saw on Monday in the wheat contract. Wheat had largely traded unchanged for 6 days, and then on Monday got a nice rally due to some fundamental gains across the world. So
Well, just talking about those fundamental gains, we've seen in the Black Sea region continued pressure from Russia, especially over some of their weekend attacks, maybe adding some more question marks back into what shipments might be coming out of the Black Sea region. So, do you think this is I don't want to call it a stable factor to trade on, but how much solid footing do you think the market has now to kind of keep these gains and maybe keep that momentum moving?
sure. So that was one of the headlines coming out of the weekend was the renewed attacks of Russia on Ukraine, bombing some ports, some export facilities. There was also quite a bit of chatter about, an anticipated renewal or increase of funds from the U.S. government to help fund the Ukraine war effort. Maybe prolonging this a little bit longer was kind of a little bit of the sentiment. I'm not sure that's necessarily as much as it is the Russia attacks over the weekend, but certainly we saw some concern in the market. I think that coupled then with a drop in winter wheat conditions here in the U.S. and the southern plain states, especially in that hard red winter wheat zone. You add both those things together, and I think we had some good old fashioned fund short coverings attached with that as well, because the funds were relatively short in wheat contracts, especially those Chicago soft and hard red winter wheat contracts. So I think all that combined helped lead the rally in wheat yesterday.
So maybe a chance for some taking there on the producer front. Looking, elsewhere and across the international market, Brazil continues to be a competitor in all things, even, domestically on the home front here in the United States. So we've talked a lot about Brazil being an export competitor to the Chinese market, but now it looks like Brazil is also competing in the U.S. market when it comes to aviation fuels. So, Ben, really right now, the situation looks to be that Brazil has maybe the lead on sustainable aviation fuels and that market in the U.S. through sugarcane ethanol, while the U.S. market and the U.S. ethanol, with corn ethanol is a little bit behind. What's your take on the picture that we're seeing right now, and where do we really sit on sustainable aviation fuel?
Well, so the storyline you're talking about here is we saw the first shipment of Brazilian sugarcane ethanol arrive to the U.S. to be utilized at a facility in Georgia to create sustainable aviation fuel. And part of the reason why this is happening is right now, sugarcane ethanol has a lower carbon intensity score than U.S. corn ethanol. The reason that that's important is because for some of these tax credits for sustainable aviation fuel, and really the programs that make sustainable aviation fuel profitable, you have to have a carbon credit score low enough to meet those credits or those tax credits. And right now, sugarcane ethanol out of Brazil is really the only product that these facilities have that meets that lower carbon intensity score. So, this is probably a blow, I think, maybe to many U.S. corn producers sitting there saying, "Hey, we just celebrated, this new facility in Georgia, the expectation of more coming online, and now we're going to supply it with Brazilian sugarcane ethanol." I don't know if this is a long-term trend. I really don't think it is, because what I think will happen is, and I think we're already starting to see this, is I think the U.S. Crop sector is going to start moving towards qualifying for lower carbon intensity corn production. This is more a production thing than a market decision. But when I think about the practices of maybe this is in-season nitrogen management, where we're getting better placement of nitrogen to help reduce that. Maybe it's no-till cropping, maybe it's adding cover crops, all these things that in general reduce the carbon footprint of producing corn. I think U.S. corn producers will start participating more broadly in those markets to sell lower carbon corn to sustainable aviation fuel. I could be all wet, and I don't know how long that's going to take, but certainly I think that's maybe the trajectory we're heading. And if we don't, we'll continue to see Brazilian sugarcane kind of dominate that sustainable aviation fuel market.
Well, but I think that's a good point, because really, I don't expect the market to go anywhere that the money and the dollar wouldn't lead it to go to at the end of the day. So until you start seeing things like this, to where Brazil now has the lead on that sustainable aviation market, and maybe corn for ethanol is a little bit lacking in that area, then it will incentivize farmers to maybe pursue those routes, because they have to, in order to capture that value and get that dollar. So I think this is one of the ways where, we've talked about carbon credits and them, artificially maybe driving the market. Well, this is maybe a little bit of that, but also a more tangible way that the market could shift towards some of these carbon, I guess, lowering emissions standards, and trying to shift the market in that direction.
Yeah, I think this, this is definitely a different version than the carbon credits, right? You're getting paid for a product that's produced in a lower carbon way. So it's the same and yet different at the same time. And certainly, we've heard it. I've talked about it out in farm country quite a bit over this past winter, about how just even finding a baseline of what the baseline carbon emission is for corn production or soybean production, or whatever it has, is really the starting point for a lot of this. It's met with a lot of pushback, for a lack of a better term, because there is this fear that if you sign up and you just even state your carbon emissions as your baseline, that'll eventually be used against U.S. row crop producers. Mm-hmm. I'm not saying it is or it's not. I really truly don't know. I think my point here is, like, if we're wanting U.S. corn to be able to compete with Brazilian sugarcane ethanol, we got to be able to show a reduction in carbon emissions from the product to qualify for the tax credits. And to do that, you gotta have a baseline to start from. And so everybody will have their own way of participating or not participating. There's not one way or the other that's right or wrong, but it is a evolving market. And again, it's a little different than the carbon credit programs that we've seen roll out from different companies.
And really, Ben, I'd almost say it mirrors more of the concerns of maybe cattle producers when they're looking at, the tagging ID systems that have been talked about within the beef sector and things of that nature. It kind of mirrors their concerns there, that, well, if we have a baseline, or you have a number of head, or a baseline for total carbon emissions, then that's something that could be taxed later down the road, or negatively impact farmers and ranchers' bottom lines. So that is a concern that needs to be addressed and kind of monitored moving forward. But Ben, it's been kind of a quiet last week. But what should farmers and ranchers really be thinking about and paying attention to moving forward?
Yeah, it was kind of a quiet week. We had a big week the week prior, so this week was a little bit quieter. Next week, we've got some economic reports coming out on Thursday of this week. We have first quarter U.S. GDP estimates coming out at 7:30 a.m. Friday. We get some information about personal consumer expenditures And the prices that consumers are paying, that is a measure of inflation and a gauge that the Federal Reserve watches very closely. And then probably for me, what I'm most interested maybe in is next Monday's crop planting and crop conditions report. I think this is potentially a big deal when we think about this part of the marketing year, because we're getting into May, or we're getting ready to start May. We're ahead right now on planting, even the states that aren't very far along, like Ohio, Indiana, and Eastern Corn Belt, due to persistent wet weather. It's not a whole lot different than what we've seen in average from the last couple of years either. So I think we still got time, but if we get a big rain shower this weekend and that delays planting for another week, maybe, then we start to get a little bit concerned.
All right, Ben, it's always great having your knowledge and insight on the program. Viewers and listeners, if you'd like to learn more about us and what we do, or our sister program, the Weekly Livestock Market Update, you can check us out at brownfieldagnews.com. Ben, thanks again. I'm Will Robinson on Brownfield.